A temporary Biden administration student loan forgiveness initiative is approaching a key cutoff date at the end of this month. Already, hundreds of thousands of borrowers have been approved for billions in loan discharges, and processing is continuing. But once a key deadline passes, two new sets of regulations will kick in. This will result in potentially dramatic differences in how direct federal loan consolidations are treated for purposes of student loan forgiveness credit. To make matters worse, these regulatory changes won't all happen at the same time. This overlapping and somewhat confusing regime of student loan forgiveness rules may lead to problems for many borrowers. The IDR Account Adjustment is a temporary Biden initiative allowing borrowers to get past loan periods counted towards student loan forgiveness under income-driven repayment and public service loan forgiveness programs. IDR plans can allow for student loan forgiveness after 20 or 25 years, depending on the plan, while PSLF can result in loan forgiveness in as little as 10 years for employees at nonprofit or government organizations. Because of strict eligibility rules, poor record-keeping, problematic loan servicing, and inadequate oversight, borrowers have long experienced problems with the IDR and PSLF programs. This has resulted in some individuals losing credit toward their 10, 20, or 25-year loan forgiveness terms, or not receiving the benefits they were entitled to under federal law. The account adjustment is intended to remedy these historical problems by crediting borrowers with time toward loan forgiveness under the IDR and PSLF programs for periods that would not have counted before, including many earlier prior of repayment, as well as some periods of deferment and forbearance. Direct loan consolidation is a key component of the IDR account adjustment for some borrowers. Those with commercial FFEL loans and other federal student loans not held by the Education Department must apply to consolidate those loans via the Federal Direct Consolidation Program prior to December 31, 2023. Under the previous IDR and PSLF rules, consolidation would erase any IDR and PSLF student loan forgiveness credit. But under the adjustment, that's not the case. If I consolidate, will that reset my payment count for IDR and PSLF? Not right now, says Education Department guidance. If you apply for consolidation before the end of 2023, the adjustment will count periods of repayment on your loans prior to the consolidation toward IDR forgiveness and, for eligible borrowers, PSLF. This differs from the earlier approach, in which consolidating your direct loans would reset your payment count to zero. IDR and PSLF payment counts may temporarily reset to zero, but then should be adjusted as the department implements the initiative.